Hello everyone, this is your trading master Mo. Today I'm going to go over a strategy. It's called Bollinger Bands. If you learn this strategy and use it wisely, you can make thousands of dollars. This is a very simple strategy. You don't need to be an expert in the market to learn the strategy, or you don't have to be a pro. But you have to know how to use it. And if you use it properly, I mean it, you can make thousands of dollars. This strategy was created by John Bollinger around 1980s. And he named it Bollinger Bands. Now you might be asking, why, if this strategy is so good, why not everyone out there making money? Why so many people are losing? My friend, you're talking to a victim. I lost so much money. I was on the verge of a bankruptcy. I didn't know what to do. Sometimes I used to get up middle of the night and cry like a kid. My wife from the living room hears me crying, and she thought one of our children is crying. She tells me, like, can you check on... She hears someone is crying. Maybe one of the kids is crying. I tell her, I'm embarrassed. I can't tell her that I'm crying. So I used to tell her, listen, I'm watching a movie. Okay? No one is crying. Sometimes, some days when so bad, man, it brings you to your knees. You didn't know what to do. But I had one good thing was going on. I wasn't ready to give up. Every day. I lose money. I get up, go to the library, start studying. And eventually, after few years, well, maybe 2 years. After 2 years, I started making money. And to my surprise, it wasn't about the strategy. See, you can learn all these strategies out there, but you're never going to make a dime out of the market. See, you have to understand, market, we don't make the market. Those market makers make the market. We only take the advantage of the opportunity that is given to us. So you need to understand the market process, which is I call the trading process. Number one, you have to be disciplined. Number two, you have to know what is your stop loss. In other words, how much can you lose and you can function normal. You don't have to worry about the money. Third, you have to know when you enter into the market. Fourth, you have to know when you exit out of the market. And if you master these four, you're a unstoppable trader, my friend. No one can stop you. So after a quick disclaimer, let's dive into the strategy. Okay, everyone, we are back. Now let me open the trading view. Okay. Let me delete all this from the chart. Okay. Now, what is a Bollinger Band? Bollinger Band is a technical analysis. It generates oversold and overbought signal. Bollinger Bands consist of 3 lines: a simple moving average on the middle, And upper band and the lower band are two standard deviation of +2 and a -2. So let me click on the indicator, type BB. You see the Bollinger bands, double click here. Okay. Now here it is on the chart. This is the lower band. This is the simple moving average. This is the upper band. In the idea derived from the standard deviation, Mr. Bollinger said the 95% of the time the stock always fluctuate between 2 standard deviation to minus standard deviation. And here is a, you could search on the Google, look at this right here, look at Mr. Bollinger is saying that this is the -2 and this is the +2. So the stock or crypto, whatever the currency or currency pair, it's always fluctuate in 95% of the time between these two. So this is where the idea derived from. So now let me go back to the chart. Okay. So now you understand what is the lower bands and the upper band. You don't have to know all this because it's out there already. And I'm going to teach you that how to trade, and that you have to understand. Okay. So now you can choose also the time frame you want to use it. For example, you could do it weekly, monthly, weekly, daily, 4 hours, 1 hour, 15 minutes, 90 minutes, 20 minutes, 15 minutes, whatever time frame you want to use. But in this case, if you are a day trader, I would recommend only use 4 hours or the 1 hour. So I set it up for 1 hour now. Now chart is displaying on 1 hour. Now, another thing you have to do, you don't have to change anything. You have to go to the setting. Click on the setting. The default setting is already 20, simple moving average. You don't have to do anything. And this is the standard deviation, plus and -2. So it's already there. You don't have to do anything. Only thing I would recommend to change this is the HL2. Why? Default setting is always close. And I want to take the highs and lows of the candles. See, when you say close of the candles, that means the average is going to take from here. You see the closing? From here to here. But if you say highs and lows, that means it's like how low it went, how high it went. You take from there. So this is why I recommend you to use HL2. So now, all my friends, get ready and fasten your seatbelt and hold your fist tight. We are on the journey to make lots of money, my friend. So let's start now. The actual work. So all these things I explained to you, my friend, these are all just to understanding the Bollinger Bands. But here is the actual work. So, assuming we know everything, we open up the trading view application, we went to the currency pair, or in that case you can put a stock or maybe crypto. But here I do a lot of Forex, so that's why I choose the currency pair. Now we know how to set up. Everything is done now. we want actually wants to know how to use it and make money. My friend, do not overtrade. Only 3 ways you will trade the Bollinger Bands. Okay? So number 1, let's say assuming you open up the chart, you don't know where you are. For example, we don't know this part. From here, I'm right here. Because, see, you got to understand, and I said earlier, trading is an art. You know, when lion hunt deers, and I'm sure you have seen on the Discovery Channel, they don't focus. Lion don't focus on all the deers. It target specifically one. The one is vulnerable, and he keep his eyes on until he feels the time is right to hunt. So this is what, whenever you open up a chart, you take a glance, you look at it, and you look at how the chart is behaving. Okay, in this case, let's say I open up and I see this. First thing, whenever you see stock is going up and down in one particular zone, that's called consolidation. You don't trade. You draw right here. I would draw a horizontal line right here, and then I would draw another line just for a little bit of clarification. So I know I'm not going to trade. This is my no trading zone. From here to here, my no trading zone. If the currency pair or the stock bounce from this line, look at this. From here, from this line, then I'm going to watch and take a position. Look at here. You could feel it. So now, it went a little bit, but it didn't close. You see, my line went back right away. Because another thing you have to understand, always try to get into the, when you take a trade, get into the retest. Because sometimes you can see a breakout, but it might be a false breakout. So now, I wait here. I see this line, previous line has been broken. Now, when outside it didn't, I wait for the retest, went back in. Now you see, whenever I see it's bouncing back from 20 simple moving average, you see it came in close and went up and then crossed this line. This right here was my highest. I get on board. And then sometimes what I do, I take a trailing stop. Trailing means, you take the first part and then you hold it and then move the trade again to the until it's stop you out. But you see, so now if I had taken trade here, let's say even you see this is a lot of people says, oh, when it's below 20 simple moving average you take trade. Now sometimes, what happened, yeah, for short time sometimes you're lucky, you make some money, but most of the time you don't even, you see how quickly we only made 2 candles and then went back again. So this is called range bound, and you don't want to trade on range bound whenever you see a breakout. So this is the only one. It's going to save you, and I'm telling you, it's going to save you a lot of money too. Why? Because you're not going to take all these unnecessary trades. Trading is about discipline. So you always see, look at this. If I go back, look at this. I would not have take trade right here between this line and this line. And then whenever I see this line cross, I would take a trade. Maybe I lost here, but you know what? I can quickly get back to this one. So some trade you'll lose, but maximum time. See, our goal is to win around 50 to 60%. And there's a saying on Wall Street, if any strategy works 50 to 60, it's called a golden rule. So this is what. And then, so this is one way of trading, breakout. Then another way of trading is called trend following. Look at this. This is like bouncing highs and lows. This is a good way to get into the market because the stock is fluctuating highs and lows. Look at this. As soon as here I know because it's as soon as it crossed the it came here, bounced back, and is crossed the 20 simple moving average. Next time it comes right here, look at this. I'm on board. I took a position. Now, what I was telling you about the trailing stop, it means like you can hold. Look at that. Your goal is if it crossed next time 20 simple moving average, then you will exit out. But here, what you could do, you could draw a line right here. Look at this is the lowest. Now you hold your position until it comes below. Now you see, as soon as when cross this high, you move your stop loss. Now you move your stop loss to this one, and you keep writing this. Now next time you don't see anything right here, so you move next one is right here. You move your stop loss right here. Next one, you move your stop loss right here. Next one, you see another one. You keep your stop loss right here, but then you see here is bouncing back again. So what do? I put your stop loss right here. Now you see it went up and kick you out, but you made the money from it. You got on board from here. So this is how you can make money. So this is second way is only trade when you spot a trending market. It could be on the downtrend or it could be an uptrend. So either way, if it's a uptrend, you take a long position. If it's down, if it's a down move is down toward the down, then you short the stock or currency pair. It works all financial market. So now let me remove this. Now the other way off, and look at this. This is another. I want to tell you some psychology. Anytime you see when two bands came so close and then started diverting from each other, and it's banging on the, look at this, it's keep banging on the upper bands. That means you gotta understand, this is like, it's just like kicking on the door. Eventually the door is going to break. So this is what he's trying to do. Bang, bang, bang. You see, he came so close, but it went right back. Matter of fact, it didn't even close. It went right back. You couldn't go there, come back again, and look at this, keep going up. So this is another way of knowing that this stock will go high and high because you could feel it. Look at how many times he's just kicking on the door to open up. And here you can see lost the momentum. Look at it, bounce back from here. So it's just safe to exit out. As soon as you see it's across the simple moving average, you will exit out of the trade. So when you are following the trend, always look at the upper bands. Or in that, if it's going down, look at this, down. Anytime you see, look at this one. It's trying to go more down, then coming down again. So you could feel it, this is going to go more. So this is why it's very important you understand the psychology of trading. And the third way, anytime you experience that any candles closing outside of the Bollinger bands, you know it's going to go back inside. So here, for example, right here, it almost closed outside. I got on board. Look at, I could be out right here. I didn't make much money, but I'm still making little money. So anytime you spot, look at this one. It came outside. You could have made, as soon as I spot this, I bought the stock or the currency pair. Look at, it went up. It crossed the simple moving average, but then came back. I was exit out right here. Or maybe I could have using the stop loss and ride it up to here. So only 3 ways you can trade Bollinger Bands, my friend. Don't overtrade. Don't try to. And so you gotta understand, like, we don't make the market. We just look for the opportunity. And if an opportunity is presented to us, we take the advantage. So this is why it's very important, my friend. Keep yourself disciplined. Don't trade, because over trade you're going to lose money, and you're going to get up middle of the night and cry like a baby, my friend. I'm telling you, this has happened to me, and it will, I'm sure, happen to many people. So this is why it's very important that you try to trade less and only focus on the best strategy. And in Bollinger Bands, only this is the only 3 ways you can make good money. There are other ways, but you know what happened? I could teach you, but you know, in the end, you're going to lose money, because those are, you have to be an expert. But if you do practice over and over and watch this video again and again, and I'm sure maybe a month or so, 2 months, 3 months down the road, you're going to become an expert, and then you're going to make a lot of money. So, my friend, thank you everyone for watching my video. Please subscribe my channel, put a comment. Do you want more content, videos like this? More videos like this. Please feel free to put a comment and like my video. And until next time, my friend, keep smiling. Thank you very much for watching this video.